how would you like to achieve your first million? And today we have Daniel Nikic, who is the founder of Cohres, and he's also a tech entrepreneur and he has helped companies and entrepreneurs to find funding and to be this point of joining between funding and projects. He has been doing this for a long time, expert in market research. So, Daniel, tell us what are the 5 steps that tech startup founders need to do in order to set the first million?
Welcome to Unstoppable Podcast with Harry Sardinas, inspiring conversations with influential millionaires, investors, thought leaders, entrepreneurs who are making a massive difference with their innovative products and services, and sharing the challenges and wisdom of how they sold their first million.
Okay, well, thank you for having me on this podcast, Harry. And the first step I would say to getting $1 million as an entrepreneur is you have to find the problem that needs a solution. Because if there's already a solution to the problem, there's no need for your product or service. And then the second step is doing your research. Are you offering a service or product that's needed in a certain market gap? And is there already competitors doing what you want to offer? The third one is if you have the skill sets, or if not, find a team or develop a team that can develop this product and service. Because as we all know, it's tough to have all the skill sets and strengths to develop a company yourself. Sometimes it's good to have a partner in the company. Some can be focused on sales and marketing, and the other one can be focused on the tech and the operations. So it's good to have about a yin yang, as they say.
Mm-hmm.
Fourth, I would say, can you manage stress? That's a skill set, I would
Wow, very
say.
important. Very important.
Because it was interesting. I saw a LinkedIn post today, and they were talking about so many entrepreneurs quit right before they could have probably got successful, just if they went. And obviously, it's not easy. Some entrepreneurs could be dealing with financial issues or health issues or personal stuff that they have to quit. We have to take that into consideration. No one's life is perfect. But if you're an entrepreneur and you can manage stress, that's a huge advantage because you're dealing with volatility. Because one day you're happy, and then the next day you're like, oh, it's gonna fail. So you have to be able to deal with the emotions. And I would say entrepreneurs were we're kind of artists in a way. We're visionary, but also we have mood swings. And lastly, can you sell the story? Are you able to sell the story that your product and service is good for someone to use? So that would be my 5 steps.
Thank you so much, Daniel. Finding a problem and look for a problem and find a solution. That statement is really powerful. I want you to expand into it because once I remember I opened a career advice division from my company. I'm telling you, a long time ago. Probably I used to have hair back then, 15 years ago. And it was a problem, right? People need to find a job. And then I was solving this problem. We were writing the CV and people were finding jobs in 1 week, 2 weeks. But you know what was the problem? They didn't have money to pay because they didn't have a job in the first place. So it's all about solving the problem, but it's not any problem. Solving a problem that, like you described, real one that people are actually they're willing to pay, but also they can afford to pay. They have the affordability because yeah, you can be solving a problem, but if the people cannot afford the problem, you're solving it, but they cannot afford your solution uh, because they don't have affordability. So can you expand a little bit more. A lot of tech entrepreneurs, founders, also investors listen this broadcast, and we really want to make it clear for the tech entrepreneurs, because we have done a research, and the tech space is one of the highest um, that we have failures in the industry. But again, you can become a multimillionaire as well, because 1 out of 5 uh, people that we have interviewed in this broadcast on Stop Off 5 Step How to Make Your First Million, they are tech entrepreneurs, right? So, what can you define a little bit more the problem? What are the characteristics you need to have the problem to be a real problem in tech space? Because we see problems everywhere, but it has to be a problem that people are willing and able to pay, right?
That's a very good point. You mentioned people are willing and able to pay. I had a meeting with a very intelligent individual a few weeks ago in Dubai, and he was mentioning ag tech. For others who don't know what ag tech is, technology and agriculture. And a lot of these companies develop AI products and stuff, but can it be used by the average farmer who probably doesn't have the knowledge how to use the AI? And I think a lot of startups need to make their products very easy to use, hence user experience. And are they really focusing on their target market? For example, if you're dealing with Actic, are you really focusing on selling it to a corporation or to an average farmer who's based in India? It could be in wherever, Czech Republic, America, and etc. I think that's very important when you mention that. Can they afford it? And I would also say, is there really a problem that can be that's really important during tough economical times, as we saw during COVID? For example, we saw all of a sudden during COVID, there's a lot of companies that are dealing with voice tech and etc. when people are in their homes and stuff. But I would also say, is it a necessity in the industry? For example, Zoom's important because you can have virtual calls with a colleague or with your team if you're in different locations, or say someone has to work from home, either they're a remote worker or they're sick, or they have a family member that's sick that they have to stay home. So that's a necessity of Zoom. A lot of these companies, are they really solving a problem that's really needed? Because I think those problems that are a necessity for industry to grow and succeed will be very successful, in my opinion.
I cannot find any funding. I have a lot of tech entrepreneurs that tell me, Harry, I'm looking for funding, and I don't understand the VC what they want. When they want a pro, they want traction. When they want traction, they always want something, and they never give me the money. On the other hand, you have the angel investor and the VCs checking hundreds and hundreds and hundreds of projects all the time and declining all of them because probably most likely those VC partners, fund manager, they have been tech entrepreneurs before. They had exit more than one time. They really know how the process work. The tech startup founder is speaking in a language that is completely different to what they want to hear. Basically, we find very common on the space that tech entrepreneurs are very product centric. So they love the product, they get in love with the product, they start to spend all the money they have, plus all the money of their friends and families. And if they have to remortgage their house, they will, in order to create this big engine, this big software that's going to save the world. Whether you point something very powerful, you were talking about uses and user experience. And this is something that first-time founders in the tech space The only ones that care more about the users and are developing this product not how they want it, is how the customer or how the market is telling how the product should be. And those ones that are able to keep it simple, like create an MVP, meaning a minimum viable product. A lot of tech entrepreneurs forget this M and just create a giant product. And after they run out of funds and money, is when they don't have energy, time, money, or anything. And now they were looking for funding. Listen carefully, looking for funding to take the product to market. And the investor are looking at me and telling me, Harry, these people are crazy. They want my money to market that thing that nobody knows somebody's gonna buy it, no? So tell us, Daniel, why do you think that we have this misconception in the tech space that tech startup founders and tech entrepreneurs, most of them could be software developer, but they're getting in love with the product, they got emotion attached to the product, and they want the product how they want it, how they see that the problem can be solved. They think that they understand the problem, but they don't, because they're not buying the problem. They're not buying the product. Who's buying the product want the product in different form, exactly what you say, with the different user experience. So how can we close this gap?
I think
Well, if
startups,
you agree also with my statement, maybe you disagree, but my opinion, we have a lot of tech founders out there that they are 80-90% of that they are product focused rather than user and clients focused. That's what I see, but maybe you have a different
yeah.
opinion. I don't know how you see this landscape.
Yeah, so I've analyzed over 15,000 companies globally.
Look at you.
So hence the hair loss. Um, I would say one thing that startup founders tend to make the mistake is that they do not look from the VC's perspective. They have to understand VCs are somewhat like a startup too. If it's not the GPs, the general partners, so the
Hmm.
management team putting all the money into a fund, they're getting funding from pension funds, institutions, high net worth individuals. So they also have an obligation to their shareholders. It's kind of a
100%.
domino effect. And they have to understand they're dealing with a venture capital fund. This venture capital fund needs a return in 3 to 5 years, most likely 3x. So, in other words, a 300% return on their investment.
In 3 years.
3 to 5 years, depending on funds. Some are
Okay.
7 to 10 if they're deep tech. And a lot of times, I see with a lot of great tech team, everything, you see the passion in a founder, but it's more of a widget than a business. And sometimes they're like, oh, we can compete with the big guys. But it could be a perspective that they shouldn't look at this as a failure. They should be working with the big corporations in that industry to be like, for example, Qualcomm or Intel. I have a product that I think is missing. Let's work together. I think a lot of times startups fail because they try to compete with the big boys or
Hmm.
girls.
Hmm.
And they should look like, you know what? We need to be realistic. Can we fundraise this to a certain time? What's our burn rate? And that's a big problem. You mentioned one thing. They spend so much money, they have no more funding because they can't manage the cash properly. Or they are too optimistic. And sometimes you got to be pessimistic to get the realistic view. So overall, I would say that they have to look at the point of view of the VC and would they invest if they had no emotional attachment to this company? Because at the end of the day, no one cares about how long you've worked on a product or service. People
100%.
do not care. They all
Oh,
have their
how much money you
interests.
spend developing? Nobody cares.
And another thing is they have to take into consideration what is the best exit strategy. A lot of them are like, oh, I'm going to go IPO and I'm going to be dealing with shareholders on a quarterly basis. Maybe you can still be successful, working with a huge corporation, and you could be a multimillionaire. And you could be relaxing, or you could negotiate to get royalties after the company like keeps on developing the product. Like there's several other ways to make money if that's your purpose. Some entrepreneurs, they might be like, I just want to make enough money so I can feed my family and live a certain lifestyle. That's still a success. It all depends what someone looks at, what they want to achieve. Based on
Yeah,
my experience analyzing companies,
yeah. Daniel, the making money in tech is different. I have when I tech entrepreneurs approach me and I telling them, they say, how you can help me to grow my business? And I say, okay, maybe let me give you some ideas. They will tell me, Harry, you don't understand. Tech is different of a traditional business. And the more and more I see tech, the more it's more similar to a traditional business. I think the only difference with tech is the valuation, because when um, it's true that the companies have high valuation when they have track record and they have some sales, and because of the data and the use that they make of the data. But at the end of the day, if you don't have a product and you cannot sell it, and you cannot prove that to the investors, it's gonna be difficult for you to find funding. Those times, Daniel, that you raise $1 million or $2 million with a piece of paper, those times are gone, or do you think that still there is room for raising a couple of million just with a piece of paper like it used to be before?
I think those days are over, and hence that's why there's a big devaluation in the startup market in 2022. I did evaluations for startups prior to that time, and let's just say they were quite optimistic, to be polite. But I think at the end of the day, cash is king. When you really look at it, I would say maybe the one type of startup is deep tech that you have to be patient with, because if you're building innovative technology, it takes time. It's a lot of
Mhm,
spending in that R&D. And now we
mhm,
see with quantum computing, and health is also an industry, because if you're going to deal with FDA approval, CE,
mhm.
it's a very difficult break into that market. But I think those valuations were a big reason why a lot of VC funds had to devalue their portfolio, and now they're having difficulty fundraising. Not all of them, but some of them who did not do the proper due diligence and I would say market research. But on top of that, VCs have also changed quite a bit too. Before it was just back like 10 years ago, write a check and just tell us when we get a return of our investment. We'll have our quarterly shareholder meetings, and that's it. Now they're very more hands-on, because startups and VCs are changing. VCs are a bit smaller, but they have a team that can assist startups to grow. And startups
Mhm.
are a lot smaller, as we see with AI, just like what ChatGPT did and these other AI tools, such as Lovable and etc. And overall, at the end of the day, business is about making money. We like it or not, that's what business comes down to. And if you're going to get an investor, they care about that at the end of the day. And obviously, there's other factors to it, reputation, ethics, and etc. But the number one thing is, can you make us money? It's not a charity. It's not a nonprofit organization.
Market research, doing the effective market research can help the tech entrepreneurs to find the money, to find funding. And Daniel, I have seen some financial projections that have come to my desk, and the numbers that I see are ridiculous. They're coming like out of the sky. You see, they say, well, we're gonna raise 2 million and we're gonna get X amount of money, and we're gonna use it for this, and we're gonna use it for that, and we're gonna use this money for this, and it's like um, all those numbers. When you ask the founder, are you really sure about this number? Are you really? Do you think that this is realistic? they just don't know. They haven't done the research effectively, and no way that a venture capitalist or any angel investor is gonna give the money. Someone that cannot even have at least a research or a reference or a solid answer to those numbers. Financial projection have loads of numbers. You're talking about cash flow. You're talking about break even point. You're talking about a lot of things going to 5 year financial projections. Yet time and time when I see, yeah, you see beautiful spreadsheet done by an accountant, but when you ask the founder what this number really, really mean, and are you sure that this number is accurate? Um, Most of the time they don't have the right answer. Maybe um, they collect this paper from the accountant maybe or from someone that helped them with the market research, but they haven't been involved enough to actually understand what those numbers means or what he has to deliver. What do you think is a massive the how can we improve this problem that is at the moment in the market where we see a lot of financial projection because but then when you bring the VC and the angel investor to see the data room and to see those financial projection and those VCs they actually understand numbers and they actually uh, know what numbers are realistic and what not. Ask the question, and we find these the startup founders unprepared, and sometimes if they prepare better and they understand those numbers, they probably will find the funding, but there is a gap there. Why do you think that that is missing in the market research and financial projection out there? Because I think they prepare a solid document. It's gonna be more easy for them to find funding. Also, they need to have exactly understand more the VCs. You need to understand that you need to have some sales, you need to have some traction, you need to know how to sell your product and how to find your clients. So you don't have these. Even if you have an excellent financial projection, it's going to be quite difficult anybody to give you money. But if you know how to sell your product, if you know how to find clients, and you prepare a very solid documents, and you have some proof that you have done this by yourself, not by a consultant, by yourself, selling your product and so on, you might have a big chance to find funding. So we're not expecting for the entrepreneurs to do 5 year financial projection or market research. You need someone really qualified like you with the proper background to do that. You know that is not easy. But if this job gets done effectively and the entrepreneur understand this number and if they know how to find clients and how to set the product, I can tell that they're going to find the money. That is easy to find the money. So how can we get better at market research and doing financial projections? Because this is like the other 50%. You have a 50% that you know how to find clients and you know how to sell your product. You got 50% to get your funding. The other 50% is what's your plan? How realistic is your market research? How accurate are those numbers? How can you defend those numbers? This is where we have the most of the weakness. So anything that we can do to improve this?
Yeah, so great question. I think financial management knowledge is very important for entrepreneurs, and it relates to a lot of work that I do because I also do financial management. And I'll give you
Can you
two
explain what
stories.
is this? Exactly. Explain
Yes,
what is financial projection, financial management, so everybody understand.
yeah, will do. So financial management is pretty much managing a company's cash flow, managing the company's finances. And projections is what's predicted in terms of future revenues, expenses, and valuations of the company. So I have experience helping companies deal with their day-to-day finances. So a lot of companies, they will get a fractional, which in other words means an outsourced financial expert to help them deal with the financial aspects. Because in a lot of cases, the founder or the team, they do not have the financial expertise and they want to focus on the tech or the sales. So they outsource that. And sometimes it's a good thing because you've heard the saying, you can't be a jack of all trades. And to expand on that, a lot of times startups, they rush their financial forecasts because they want the investors to focus more on the tech or what they're doing right now. And it goes back to what we said earlier. It's money. What can I get a return on my investments? So I believe, based on my experience, when you're doing projections, forecasts, you have to take into consideration what's the actual status of the company. And I have done it several methods. They have been realistic. They have been pessimist. What if it goes even worse than it is currently? How can it look like? Because you have to be prepared for all problems and situations if you're going to be an entrepreneur. And it goes back to managing stress. And another point is it could also be optimistic because sometimes you get those two big long-term clients, word of mouth spreads, you're skyrocketing. There is times that has happened. We could look at a lot of the unicorn companies that just exploded. For example, it could be Meta, it could be Google. Look at Google. There was Yahoo during that time. There was Ask Jeeves. There was all these other search engines. So there is obviously certain companies that can explode. And sometimes it's good to be like, when doing financial projections, to be like, these are my pipeline potential customers. If we get this customer, this will impact this. And you can have drivers. So for those who don't know, understand drivers, they're like pretty much options to see if I get this client, it will impact the future financial projections, stuff like that. So that's how I would approach financial projections and financial management. If you're not an expert, outsource it. There's always others that can help. Obviously, if you have the financial means, because at the end of the day, no one's going to do pro bono work, or you bring someone in and offer them shares in the company if you can't offer them a competitive salary.
And financial management is very important because the financial projections, this is why I think that they are very interconnected, because I have seen some financial projections that they say, okay, fine, we're going to invest in pay-per-click, let's say social media advertising, pay-per-click in general, uh, let's say $250,000. But this is something when it comes to the finance management. If you get, it doesn't work like, okay, you got $250,000. Okay, I'm gonna get 20,000 for TikTok. I'm gonna get 20,000 for YouTube. I'm gonna get 20,000 for Meta. I'm gonna get 20,000 for Instagram. It doesn't really work like this. You have to test small, and if YouTube is working better, you have to stop the funding that's supposed to be for Meta or whatever, and continue doing the ads in YouTube or in whatever platform it works better. And sometimes because of lack of knowledge in financial management, we can be the position in the startup, like say, okay, the financial projection says a $250,000 for social media. So what I interpret from this is I will divide exactly this amount of cash in the 7 social media, 8 social media. We're gonna market the product, and that's it. We're gonna roll over at the same time, and this is how this is what it says in the financial projection. And after people running like that, and they run out of money, and they don't understand why you run out of money. Why you run out of money? Because out of these same amounts, only, I don't know, YouTube or Facebook work or Meta works, and the other one it didn't work because your potential client is not hanging out in these platforms. Same with software development or operations. Um, you have to manage that capital because when it's gone, it's gone.
Yeah.
When it's gone, it's gone. And also focus what is important, because I think that in the startup phase, um, especially at the very beginning, in my opinion, 50 or 80% of that capital should be allocated marketing and sales, should be allocated in how to sell that product. Because if the product is not selling, it's difficult. Even if you waste your money, but you sell it and you make some profit, you will be able to raise again. But if you don't sell it, that's it. you finish, because it's tough to raise out there when you have um, no sales, or very, very little sales. So finally, Daniel, where can you tell us a little bit more what you specialize, and the people that are in love with this conversation, how can they find you, how this process work?
Sure. So I do investment research. So in other words, market research, financial analysis, due diligence. So due diligence, analyze if someone should invest or not invest in a company. And I've been doing this on the global markets, from looking at companies from North America, South America, all the way to the Middle East. And the best way to find me is on my website at www.danielnikic.com, or you can also check me out on my LinkedIn, and I'm quite responsive. So if I see there's synergy and stuff, I'll definitely get back to you.
Thank you so much, Daniel. And without note, see you guys in our next episode of Unstoppable, how break entrepreneur like Daniel break that wall and achieve the first million. Bye for now.
Thank you very much. Bye.
Follow us for more interviews with world's most influential, audacious entrepreneurs that overcame challenges and adversity, providing you with the blueprint of how they sold their first million so you can grow your business exponentially.